Alright, hello, welcome back to the podcast. Once again, everybody, PayPal and Patreon links are both down below for anybody who wants to support me. Only do so if you actually can. So, there has apparently been talk going around of $200 per barrel oil. So is that a thing? Is that actually going to happen? Well, eventually, yes, sometime during this decade, especially once we get further into it at least. Not at this particular point in time, I wouldn't actually imagine. Although oil prices have been spiking up, they've jumped up into the 70s and back up to around $80 a barrel for the first time since 2014 or 2013. That's been caused by a number of different things. However, the likelihood of it actually going all the way to 200 at this particular point, I doubt. It will almost certainly be going up over 200 later in this decade when we hit the second global production peak, just as how it went up towards the record price of 147 back in 2008. Back when we hit the first global oil production peak and production kind of stalled out for a couple of years before the shale production boom brought about and enabled by those high prices, along with production expansions everywhere else, also furthered by those high prices, began bolstering production back up again and resumed carrying us up to the point where we had gotten to now, just before the crash of last year at least, from all the effects of the situation that happened last year. We will almost certainly be seeing a similar scenario to that playing out again one more time, sometime this decade, later on in the decade at least. And the ultra-high prices that come about from that will enable the development or expansion into like the final realms of petroleum that we haven't really touched yet. And the added production from that might be enough to keep the global supply kind of plateaued there for a little bit before it inevitably starts going terminally down. But for this present price spike scenario that we're currently undergoing at the moment, with oil prices now nearly back to $80 a barrel, this has been brought about by a number of things. Namely, now global oil demand is almost back up to where it was before the situation started, as last year in 2020, right before the whole health situation and economic crash resulting from it began, global oil demand had made it all the way up to 102 million barrels per day. And then because of the situation, it crashed all the way down to the 70s, briefly sprung back up into the 90s, and has gradually been making its way back up through the 90s since then, and had gotten back up to about 98 million barrels per day recently. However, although the finalized data hasn't been given out yet for the new monthly update, it most likely is back to around 100 million barrels per day now, just based on some of the individual countries' newest monthly demand level updates, with China rebounding back up from about 12.5 million up to about 14.5 million, India rebounding from about 4 million up to about 4.5, Russia climbing back up over 3 million from the upper 2s into the lower 3s, and the US being back to pretty solidly fluctuating between 20 and 22, and frequently being between 21 and 22, even during one particular week, last month I believe, breaking its previous record and almost going up to 23. With those demand surges or demand recoveries also being counterbalanced by some fallbacks in other places, like Mexico's demand level still lingering down by quite a bit, along with Australia's demand level slumping back down with their new lockdowns and everything. Indonesia still lagging behind a bit. A decent number of European countries also still lagging behind by like 10 to 15% of what their normal would otherwise be. So it's enough counterbalance to where I would say the net increase, instead of 3 or 4 million barrels per day, it's probably only about 2, which 98 plus 2 would put it back at 100. So like I said, probably global oil demand as of now is likely back up around 100 million barrels a day. Meanwhile, global oil inventories have been dropping. U.S. crude oil inventories, which swelled up during the initial oversupply period after the initial demand crash of last year, they've declined their way down from about a height of 550 million barrels in storage down closer to around 400 now, along with various other nations' inventories gradually slumping down as well. And as demand is quickly jumping back up to normal, production is lagging behind it. That's another factor, as the previous month when demand was at 98, production was at about 97, and OPEC is gradually ending the production cuts and re-increasing their production. However, they're doing it moderately, and also the missing 2 million barrels per day from the U.S. that was lost because of shale production taking such a huge hit from the price crash initially last year. That's roughly 2 million barrels per day, down from 13 to 11 that the U.S. suffered, is not coming back anywhere near as fast as anybody was initially predicting or hoping it would. It had gotten back up towards like 11.5. So if global oil demand's back up to about 100 million barrels a day, and production was at 97, plus the roughly 400,000, maybe up to 500,000 that OPEC added, that would put production up to 97.5. The U.S. increase from 11 million back up to 11.5 or so. So maybe production thus from those two has gotten back up to 98. So now instead of the previous 1 million barrel per day supply gap, there's now a 2 million barrel per day supply gap. Also, there's about to be a sudden additional surge of oil demand, particularly from the industrial sector as chemical feedstock, as because of the recent natural gas price spikes. A number of industries are looking to, in the immediate term, switch their feedstocks for what they make their chemicals out of from natural gas back over to using oil, as that would be cheaper for the moment given the 50% surge in natural gas prices. So over the next couple of weeks and months, that's going to bring about a sudden upsurge in oil demand as well. Not like a huge mega surge, but a few 100,000 barrels a day at least. And then of course also it's heading in to the colder months as winter is approaching, and so there's going to be the increasing winter demand from that for heating oil. So all of these things have piled together to currently give us $80 per barrel oil, roughly, although it did tumble back down towards like the mid-70s recently. What else may come of it? Well, there should be some additional relief from increasing production, as at least over the remainder of the year. On an optimistic note, maybe we can assume the U.S. gets back up to 12, so that would add another 500,000 barrels per day of production. Canada may be able to get all the way back up to 5. OPEC will theoretically continue adding production back up to their normal capacities to the amount of 400,000 a month, so a bit over 1 million barrels per day over the remainder of the year. So that would put it at least back up to 99.5, potentially like 99.7. Might be able to count production up to 100 by the end of the year with an additional 300,000 coming from Brazil getting its fields that are currently down for maintenance back online. However, then you'd have to take into account where would demand be by then. So then we'd have to account for one, continuing demand recovery, and also ongoing demand growth from rising nations that are still growing, and even first world nations that still have increasing populations, along with the sudden increase in demand from the petrochemical industry switching back over to oil because of natural gas prices, and also the rising demand for heating oil. So for just the second two, maybe assume a rough 1 million barrel per day increase, so that would put demand at 101, and with production potentially being back up to 100, that would bring it back down to a only 1 million barrel per day supply gap. However, then, as mentioned, we'd have to account for the first one, potential ongoing demand recovery and also demand growth, as even just one of the largest examples at the moment, Japan, is currently closer down to around 3 million barrels per day when their normal demand level is around 4. So they could go back up at any time. So even just that would immediately bring demand back up to 102, thus bringing the supply gap back up to 1.5 million. And India could always recover back up to the 5.5 million that they had grown up to before the start of everything last year. And going up from 4.5 up to 5.5 is obviously another million. That would put global oil demand at 103 million barrels per day, thus making the supply gap at that point 2.5 million. Indonesia is still down by about 500,000, so that would go up to 103.5, and then any potential amount from the little bits and pieces still missing from the European nations. Oh, and Mexico. I almost forgot. Mexico is still down by a bit over 500,000, so even just counting for them, if they suddenly came back, that will put demand up at 104 then. Again, if all of the others also came back as well. Because remember, that's worst case scenario. We don't know. Maybe all of them will suddenly come back up to full demand. Maybe some of them will. Maybe none of them will. So heading into the winter months, It looks like a best case scenario, probably the supply gap, which is temporarily widened, reducing down to only about 500,000 barrels per day, smaller than the 1 million barrels per day that it's been, and much smaller than the 2 million barrels per day that it currently is, or likely currently is. I don't know for sure. And worst case scenario, potentially going up to as much as 3 million barrels per day of supply deficit, which would obviously cause global inventories, spare oil and storage, to start getting drawn down much faster. Alright, that's it for this one. So thank everybody for sticking around and listening. Like if you enjoyed, subscribe if you haven't already. Always have dozens of other episodes talking about similar stuff. You can support me through PayPal or Patreon if you want to, and only if you actually can. May God bless and protect all of you, and I will see you all around next time.